So lots of stocks in focus, but the market is absolutely flat. So let's get some perspective going. Yogesh Patil, Chief Investment Officer of Equity at LIC Mutual Fund, is with us. Yogesh, good to have you on the show today. So, let's start with the broader picture. The market has navigated a lot of different worries. Slowdown in earnings, slowdown in consumption, and then, of course, a lot of the global headlines in terms of tariffs and what's happening with interest rates. You tell us, I mean, broadly speaking, for the next 1 year or so, do you see the market higher? Do you see it range bound, or do you think that there is still a possibility of perhaps, the correction opening up again?
Good morning, and thank you very much for hosting me on your channel. See, long-term equity investment is like an infinite game, where you need to accept a lot of positive news, negative news, and developments as well at the same time. But we should not forget, India is the only country which offers a very high growth, and high growth comes with a long digital growth, basically. So India is completely growth-driven story, driven by Capex, infrastructure investment, urbanization, decarbonization, and basically, up to some extent, consumption. So it is a long driver, and we do see there might be short-term challenges in near term, maybe 1 or 2 quarters. But in terms of long-term growth, India is still heading for a very good growth, and China Plus One is actually picking up when you talk to corporates. And when you see the new project announcement, the manufacturing almost account for 40 to 45%. It gives a confidence that Indian entrepreneurs actually thinking about China Plus One and India growth story. And the second point, if you see the last 30 years, the kind of capex we've seen in last 30 years, the next 10 years could be very different. And the major growth drivers could be real estate and private and government, not government, basically PSU capex. This almost account for almost 70% of the gross fiscal capital formation. And this could be, we expecting a roughly higher double-digit growth in these 3 segments, and which will drive the India growth story. And this will reflect in the sectors and in the companies. And beyond a certain point, then consumption will also pick up. As of now, consumption is slow because of a lot of structural changes that happened in last 8 years. After demonetization, GST and COVID actually completely broken the legs of informal sector. Today, as per RBI, 64 crores employees in informal and only 6 crores in formal. So slowly, it will take some time to adjust, and a major slowdown in consumers and consumption is basically lack of new buyers. And eventually, someday they will get a new jobs, and the new buyers will come for this segment. Right. And then only we see a consistency in growth and the sectors. As of now, the India growth story starts with manufacturing, infrastructure, and then followed by consumption and improving the per capita income. Today, the per capita income is completely skewed towards richer people, maybe 2-3% of the population. And it has to be narrowed down beyond a point. Then only you see consistent growth and continues. As of now, in initial years, it will be completely driven by capex and basically manufacturing based.
We'll take that point, Yogesh. Just hold on for a second, because the stock of the moment definitely is Religare. Opened with a mild gain, but now look at the volumes and the stock price move piling up almost 8% closing in on that 300 rupee mark on the stock. In fact, today's high has been above that itself, a 52-week high for Religare itself. The nod coming for the Burmans to purchase additional stake in the company, having the street excited. That's about a 1-month chart, but just look at today. The intraday today itself opened with a mild green tinge, and thereafter volumes and the stock price action kept picking up itself. So that's about Religare. We'll keep an eye out on this story as it develops. Yogesh, coming back to you, you said that, India's per capita income story and consumption story, the Indian economic story continues, but a large beneficiary of that would perhaps be the financial space as well. Not asking specifically about Religare, but what's your view on the financial sector? Would you look at banks, private sector, PSU, or NBFCs?
Definitely, India has to grow. Definitely, BFSI segment will follow that. But in BFSI, the competition is currently very high, and there would be winners. We need to choose. But as of now, we are preferring private banks and selected NBFCs. Those who have proper discipline, and they any company which is not have proper credit, so normally we are avoiding those companies. So as of now, we are bullish on selected private sector banks and selected NBFCs, but broader theme in BFSI is completely actually disappointing in terms of, let's take a MFI and even the regulator has highlighted there is a risk in unsecured loan. So to that extent, we are avoiding some of the banks and NBFCs.
Okay, all right. Hi, Yogesh. Good morning and good to see you in. This is Nigel on this side. Well, we're going to have a new RBI governor. The broad consensus is that we'll have continuity. However, the MPC committee, the constitution is going to have large number of new members. How do you see this, playing out, and your initial take?
See, definitely somebody is joining is definitely come with a lot of expectations. So I'm sure we expect continuity in the reforms and maybe decision makings going forward also. At the best, I can say this one only.
Yogesh, so okay, let's take the the overall portfolio construct. What would be for 2025? What do you see as your top 3 overweight themes or sectors?
Okay, it is a combination of Capex and manufacturing. Then start with power sector. We are bullish on power sector, industrials, chemicals, up to and IT and selected selected financials. And at the same time, we see improvement in rural economy is a combination of higher realization prices, higher output, lower agri cost, and government's indirect support to the rural economy. So we see these are the segments which could be seen a good growth in FY25.
All right. Just before we again come to you for the last question, keep an eye out on Oracle. It's a listed IT company in India. No direct business relation with the US Oracle, apart from the fact that the US-based Oracle, the international company, is its promoter, holds about 72.6% stake. In the past, we've seen every time there is a big up move in Oracle overseas, we see an impact on the way up in Oracle Financial Services in India as well. But overnight, post-market close, Oracle was down 7% after a weak second quarter performance, and as a result of which we are seeing a bit of a rub-off in the Indian stock as well. It's seen a decent move, but the last couple of days it has seen a decline from the highs itself. So we'll watch out for Oracle, how it performs in today's trading session, and whether this selling is largely sentimental and or if there is any business relation between the two as well. But speaking about Oracle, again, Yogesh, the IT sector, the Nifty IT index has seen some recovery in this month itself. It's up close to around 7%. The best sectoral index that the way it's performed so far as compared to the market. Do you have a view on the IT pack?
Yeah, we are positive in IT. If you see in last 2 years, the sector was struggling, but from last quarter, the commentary of management has changed. From now, no one is talking about the project cancellation or delays. Everyone is looking positive, and the commentaries are very positive. And the selected growth is coming from geographies and a segment like BFSI. But at the same time, we need to adjust all these things with Trump government, how the Trump government behaves. As of now, bottom, basically negative part of the negative bias from IT is actually behind us. But how the Trump administration take this forward. But as of now, sector looks good if you ignore government point of view. But even individual companies are highlighted, they're getting good business and good visibility from their clients.
Okay, all right, got it. Thank you very much for that, Yogesh. Good to have you on the show today. Well, just a quick spotlight on the market.